Hey, good morning. Let's go over today's trade plan. So far in the overnight session, we've seen a breakdown from the previous 4-day balance. And heading into the open this morning, the main question is going to be whether that breakdown is going to persist and the market's going to continue going lower, or if it's going to be a false breakdown attempt and then the market continues to balance within the recent 4-day range and we get a move back into the 34 to 36 area and possibly even a little bit higher into yesterday's high and the naked VPOC and open gap above. So we're going to use the 25 quarter to 27 quarter as the micro bull bear zone to help us establish our directional bias. If the market is holding below that area, then we know that the sellers are still in control, and that can lead to a test of the 17 quarter, 19 quarter initial support and the 11.5 to 13.5 support area. Now, if the market is in balanced breakdown mode off the open, where the advanced decline line is trending lower, the tick is holding below zero, which is representative of sustained downside momentum, then 17 quarter, 19 quarter is going to be an area that calls for caution, because if we are in balanced breakdown mode, then we can extend the range quite easily into the 11.5 to 13.5 and possibly even 0575 to 0775. But the 11.5 to 13.5 and the zones below are high probability areas of support where buyers can be active on first test. So even if we are selling off into it, as long as the market's exhausted into 11.5 to 13.5 or 0575 to 0775, those are good spots for responsive buyers to be active for a bounce. On the upside, in the event that we actually stabilize here and start holding back above the 25 quarter to 27 quarter, we can go up and test 34 to 36, which is the main resistance area on the day time frame. First test of that zone can still attract sellers and we can get a reaction. But if we are going up on strong momentum, then we know that this is a false breakdown attempt and that the market is still range bound. And even though we might get a reaction at 34.36, as long as we are seeing a rising and bullish advanced decline line and sustained upside momentum, then there would be potential to test yesterday's high and possibly even fill the gap at 42.5 and tag the naked VPOC at 40.5. And 45 to 47.5 is then the stronger area of resistance, which marks the balance area high, and that area is very likely to hold at this point because Thursday is the last trading session for this week. Friday the markets are closed, so just keep that in mind too. That heading into the weekend, it's unlikely that the buyers are going to carry risk from the 45 to 47.5 area. So even if we get a upside move here, we're probably going to get a range-bound market. In the event of a downside move and some risk-off behavior, we can still go down, but attract responsive buyers at 11.5 to 13.5, 0575 to 0775, and in a very extreme case, 95 to 98, although that seems unlikely at this point in time. So off the open, keep an eye on pre-market support and the micro bull bear. That will help establish and set the bias for the day, and we'll take it from there.